Welcome to Crypto Minutes, your daily cryptocurrency news for March 16, 2019. We source a minimum of 5 of the best trending articles of the day, from popular news aggregator CryptoPanic.com. Timestamps and the original articles can be found in the description links below.
Daily trading volume for the world's largest cryptocurrency Bitcoin exceeded $11 billion Friday, the most observed in a 24-hour period since April 25 of last year. At that time, the average price of Bitcoin was $8,845, while today the crypto asset is listed for less than half the price, currently trading at $3,951 as per CoinMarketCap. However, the return in volume is potentially a sign investors aren't losing interest in Bitcoin despite the less than favorable market conditions. Interestingly, the amount of Bitcoin trade volume had closely aligned with its price trend for years, but upon closer examination, the close connection ended during the latest market rout in November when trade volumes failed to sync along with the quickly depreciating broader cryptocurrency market. As can be seen below, the divergence between trading volume is evident for not only Bitcoin but other top-ranked cryptocurrencies like the fourth largest in the world by market cap, Litecoin (LTC). Bitcoin trading volume. Just before the plunge to $3,000, Bitcoin was priced at $6,385 on November 10 when it accumulated $3.70 billion in 24-hour exchange volume, according to data from CoinMarketCap. Today, however, Bitcoin's price is nearly half of what it was in November, yet its trading volume is just above $11 billion, which is 200% more than the trading volume seen on November 10 and a value last commonly observed in April 2018. CoinMarketCap data further reveals the most exchange volume the world's largest cryptocurrency ever saw in a single day was $23.84 billion when Bitcoin's price was $17,429.50 on January 5, 2018. Litecoin exchange volume. Litecoin's exchange volume is following a similar trajectory as Bitcoin's exchange volume. As can be seen above, exchange volume began to deviate from Litecoin's price trend around November once again, when the cryptocurrency was trading in the $50 range and exchange volume figures spanned from roughly $300 million to just over $600 million, according to data from Coinmetrics. Litecoins is now trading at $58 and its 24-hour exchange volume registers $1.79 billion, again, more than double the values frequently observed before the cryptocurrency plunged below $30 in November. The slight difference between Litecoin and Bitcoin's trading volume and price relationship is that Litecoin's price has increased over 100% since its December low along with the rise in exchange volume, while Bitcoin has seen a more seldom 20% increase from its low. Brock Pierce, the former child actor, American entrepreneur, and early adopter of Bitcoin (BTC), recently did an interview with Forbes where he talked about all things blockchain and what 2019 holds for the industry. According to Pierce, decentralized applications, security token offerings (STOs), and the gaming industry will see substantial development and growth in 2019. dApps will achieve millions of users. The interview kicked off with a conversation about decentralized applications (dApps), where Pierce was quick to say that we will see big things being built in 2019, even stating that some dApps will reach 1 million users. He then noted that we are experiencing a major bear market, and that he loves it when prices are low because that's when big things get built. Adding to this, Pierce said, "When prices are up, very little gets built because teams don't stick around. Everyone is getting rich too quick and that demotivates people. All the best things I've seen built in this ecosystem have been built in bear markets." When asked about the current state of decentralized applications (dApps) and what needs to be done to drive real adoption rather than just provide developer testing grounds, Pierce said 3 things need to be done. They have to be scalable. They have to be fee-less and frictionless. They have to be fast. He then carried on to say that with blockchain technology and decentralized applications we are building the new internet, and that new standards need to be set. He stated that obviously no one will use this new internet if it's slow, costs money, and doesn't scale. Pierce then name-dropped a few dApp and smart contract protocols that are well on their way to achieving this, proclaiming that third-generation protocols like EOS, Tron, TRX, and Cardano (ADA) are checking the right boxes now. Security tokens will give birth to a quadrillion-dollar market. The next topic Pierce was asked about was security tokens and security token offerings (STOs), and how they're poised to pick up where the initial coin offering (ICO) market left off. To this Pierce responded, "Security tokens are going to give birth to a quadrillion-dollar market. This is because we will see the tokenization of the world's fiat money, debt market, real estate, equities, and art." According to Pierce, security tokens will disrupt the capital markets in a way that ICOs could not. He stated that, without adequate regulations in the blockchain industry, the ICO market was essentially the Wild West where market participants had no protection and scams ran rampant. Pierce says STOs will have the proper framework to protect investors, stating, STOs are designed for investors and can have many provisions that are there to protect market participants. The gaming industry will drive crypto adoption. Pierce has a history in gaming and founded Internet Gaming Entertainment (IGE) company back in 2001. Therefore, he is very familiar with the gaming industry and believes gamers and the ever-growing gaming industry will be a major driver in crypto adoption through 2019. Providing some background on the relation between crypto and gaming, Pierce said, "The earliest adopters at scale of crypto were gamers. That's why Korea and China are so big. These were the markets where people played video games and bought and sold virtual currency for games like Second Life and World of Warcraft." For this reason, Pierce thinks there's a very good chance that the community of gamers will drive another wave of adoption in crypto, just as they did in the beginning stages. Founder of hacked Bitcoin exchange Mt. Gox Mark Karpeles sentenced to over 2 years. Mark Karpeles, the founder of the now-defunct Bitcoin exchange Mt. Gox, was found guilty of tampering with records and given a suspended prison sentence of 2 years and 6 months. The High Court ruling comes 5 years after a massive security breach in 2014 at Mt. Gox that led to millions of dollars in losses for both local and foreign Bitcoin investors. The courts found Karpeles guilty of illegally producing electronic records in connection to Mt. Gox's books and was given a sentence of 2 years 6 months. He was not found guilty of embezzlement and aggravated breach of trust. According to WSJ, if Karpeles remains on good behavior over the next 4 years, he won't serve prison time. History on Mt. Gox. At the time of the hack, losses were pegged at 850,000 bitcoins, consisting of 750,000 customer bitcoins, 100,000 of the exchange's own and worth approximately $500 million. 200,000 bitcoins were later found by the company in an old hot wallet, bringing the number down to 650,000 still lost in total. Karpeles eventually stood trial in 2015, but not on account of the theft. Instead, he was charged with faking trading information at Mt. Gox over several years and embezzling $3 million in customer funds deposited with the company. As reported by the Japan Times, Karpeles came under scrutiny after prosecutors claimed he used the embezzled money to fund an ostentatious lifestyle, including living in a $11,000 a month rented apartment and regularly spending on overseas trips. In addition to personal expenses, he reportedly launched a high-end 3D printing business, a cost deemed unnecessary for Mt. Gox's purposes. However, Karpeles maintains innocence to this date and denied all charges levied. He told reporters after his last trial, "Most people will not believe what I say. The only solution I have is to find the real culprit." Mt. Gox periodically liquidates its Bitcoin holdings to compensate customers in fiat amounts adjusted for 2014. Last year alone, an exchange trustee sold over $230 million in tranches consisting of Bitcoin and Bitcoin Cash. However, as earlier reported by CryptoSlate, the liquidation is more of a legal obligation than an act of goodwill. Japanese laws require creditors and investors to be compensated and are eligible for protection under a guarantee claim. Attackers still at large. Years after the crime, the hackers responsible for stealing bitcoins from Mt. Gox remains unknown. However, the incident exposed significant loopholes in the way cryptocurrency exchanges were operating around the world, resulting in governments beginning initial work on regulating and legalizing the nascent asset class. In 2017, Japan, where Mt. Gox was headquartered, became the first major economy to legalize Bitcoin trading. The state introduced its crypto licenses framework requiring all exchange operators to meet strict operational criteria and conduct rigorous KYC procedures on customers. Reception to Karpeles' sentence on social media is mixed. Some in the community are satisfied that he was brought to justice as the executive responsible for Mt. Gox when the exchange was hacked, while others have voiced concerns with the relatively light sentence considering the impact it had on the Bitcoin ecosystem. Regardless of the public's opinion, Bitcoin has recovered from the catastrophe and new exchanges have filled the vacuum that Mt. Gox once occupied. Bitcoin News: Dr. Doom actually buys Bitcoin, says BTC may be standard of money in future. Moneybag Hourglass Mark Faber, a renowned Swiss investor, has shared that he has bought a bit of Bitcoin, saying his attitude towards BTC has begun to change. Contents: 1. Mark Faber reverses his opinion on BTC. 2. I would have bought Bitcoin earlier. 3. Dr. Doom vs. Dr. Doom. Mark Faber is also known as Dr. Doom or the Cash Prophet. He is widely famous for his pessimistic stance regarding the market of traditional financial tools and criticizing central banks along with their monetary policy. Overall, he has been a great skeptic regarding crypto and Bitcoin in particular. However, the other day in an interview, he admitted to having bought some BTC to study this asset closer. Mark Faber reverses his opinion on BTC. Faber currently lives in Thailand, though originally was born in Switzerland. For his long 40-year career as an investor he has been called Dr. Doom. Back in 1987 he made the right forecast of the stock market collapse. Following Faber's advice, his customers managed to save their money. Now, he says in an interview with the Cash website, he is prepared to give Bitcoin a try after many years of skepticism. I would have bought Bitcoin earlier. Faber has not disclosed how much Bitcoin he has purchased, but admitted that BTC is much better to buy at $3,000 than at $17,000 as it was in late 2017. Throughout the month, BTC has risen from $3,400 to $3,800, which Faber took as a good sign. He admitted that he would have bought Bitcoin even earlier but decided not to since he did not understand the technology it was based on. He also mentioned that he finally decided to dip his toes into Bitcoin after a talk with Xapo CEO Wens Casares, which lasted about an hour. Under Jay Clayton's watch, the SEC is chasing billions of dollars out of the U.S. economy by stalling on a Bitcoin ETF. Source: Reuters. Brendan McDermott. SEC chases billions out of U.S. economy by dragging feet on Bitcoin ETF. Many cryptocurrency investors and entrepreneurs have anxiously awaited a green light from the U.S. Securities and Exchange Commission for the first Bitcoin exchange-traded fund (ETF). A Bitcoin ETF would bring more products to Wall Street and give institutional investors more direct access to an asset class they are clearly very enthusiastic about in 2019. Crypto capitalists like Cameron and Tyler Winklevoss even say they welcome the scrutiny of the SEC as well as institutional and federal regulation and oversight. But the SEC has rejected every Bitcoin ETF application it has ruled on so far. SEC Chair Jay Clayton wary of Bitcoin reliability. SEC Chairman Jay Clayton's stance on cryptocurrency hasn't wavered over the years. Fox Business has an exclusive interview with U.S. Securities and Exchange Commission Chairman Jay Clayton, in which the SEC chair defended his position on cryptocurrency. Clayton says he is not against digital currencies but has concerns over the potential for manipulation and wants to ensure investors are protected. The SEC chair also says, "What I'm concerned about at the moment is if it can be reasonably demonstrated that the underlying trading is generally not manipulated, it's happening on reliable venues with good rules, and that custody is something we can feel comfortable about." A reliable venue with good rules, you say? That's an excellent description of the Bitcoin blockchain and the underlying hardware infrastructure and software protocols to verify, maintain, and update the blockchain. These qualities are in fact among Bitcoin's key selling points as an alternative form of money. That the blockchain is a reliable venue with good rules is what has given the digital money minted by people running a homespun open source code project on their computers a total market valuation of tens of billions of dollars. Those tens of billions of dollars feel quite comfortable about the reliability of the venue where many of them are parked and through which others flow. And that the rules are good. But not only the rules. The software architecture that governs enforcement of the rules automatically and impartially is dangerously good too. SEC is chasing U.S. business overseas. The fact that Bitcoin is already proven reliable and already has rules that are simple and understandable and work automatically is why it's such a high-dollar digital commodity. Despite being in what people are calling a crypto winter since what was the Bitcoin all-time high price peak in December 2017, investment demand for Bitcoin has remained voracious. That's why so much money is flowing through the exchange of Bitcoin right now that the world's largest cryptocurrency exchange, Binance, paid dividends out of its profits last year to the tune of $500 million to users of its trading token, Binance Coin. By dragging its feet on the first Bitcoin ETF, the SEC is leaving money on the table for Binance CEO and founder Changpeng Zhao to scoop up instead of a Wall Street broker. That's less money for the U.S. federal government to make on the domestic finance industry's taxes as well. It's really no different from Alexandria Ocasio-Cortez chasing Amazon's cash out of Queens through her own campaign of fear, uncertainty, and doubt. Honestly, many in the cryptocurrency community are probably happy for the SEC to drag its feet on legalizing Bitcoin ETFs among other crypto investment products so the developers of cryptocurrency exchanges can continue to hog all the business and Wall Street just watches it happen. Similarities between ETFs and the crypto boom. There is a remarkable similarity to the explosion of ETFs starting in the late 1990s and the explosion of over 1,600 cryptocurrencies in the wake of Bitcoin's introduction in 2009. Exchange-traded funds are shares of a fund that owns some asset, which are used and traded as securities. Many ETFs track an index for which the fund has purchased a proportional amount of the underlying equities. Others track commodities like oil, cotton, or gold that the fund actually owns. Others still are custom baskets of assets. There is a remarkable similarity to the explosion of ETFs starting in the late 1990s and the explosion of over 2,100 cryptocurrencies in the wake of Bitcoin's introduction in 2009. The very first ETF in 1989 tracked the S&P 500 and was traded on more than one exchange until an exchange successfully sued for the security to be delisted. ETFs made their big breakthrough in January 1993 with Standard & Poor's Depository Receipts (SPDRs). By December 2014, the total market capitalization or value of all ETF assets in the United States hit $2 trillion for the first time. There's a big appetite for Bitcoin derivatives, and there's a big appetite for crypto ETFs as well.
Thank you for listening to Crypto Minutes. This is not financial advice. If you enjoyed the articles, please click like, share and subscribe or donate. See you tomorrow for more breaking news.